Hey everyone, PayPal reported third quarter earnings results, and as I do with many of the companies that I follow, I update my buy recommendation for the stock after earnings are announced and I analyze those earnings results. So that's what I'm going to do in this video. I'm going to update my recommendation for PayPal stock. Coming into this quarterly report, I did have PayPal stock rated as a buy. So you're going to want to tune in to see if I'm changing that recommendation or if I'm keeping PayPal stock rated as a buy. So let's get right into these results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Revenue of 7.4 billion in the third quarter grew at 8% year over year. PayPal has been trying to keep costs under control, and they did a good job in this current quarter with non-transaction related expenses declining 12% year over year. We'll take a look into the details of that more later in the video. And non-GAAP EPS growth of $1.30, which grew 20% in the quarter. Management again was forecasting robust earnings per share growth for 2023, and it does look like they are going to deliver solid earnings per share growth for the year. So in the third quarter of 2023, transactions increased by 11% for PayPal, and the transactions per active account increased by 13% to 56.6. This is good news because it means that that customers are utilizing their PayPal accounts more and more often. This likely means that PayPal is delivering better and better service to these customers, and they're more likely to stick around with PayPal longer term. This is crucial right now for PayPal because what I'm going to show a little bit later in the video was a little concerning, and that was the total number of accounts. And we'll look at that a little bit later in the video. Total payment value in volume increased by 15% to 388 billion in the quarter. This is critical because this is the payment volume that PayPal makes revenue from. PayPal takes a transaction take rate from each transaction that happens on the platform. So the more value being spent on PayPal's platform, the more available for PayPal to take for itself as revenue. And I'll show you a little bit more about that later in the video as well. So here's one of the things that I love about PayPal and PayPal stock. Again, I am an owner of PayPal stock. I do own shares of PayPal stock. And one of the reasons I like PayPal, in addition to the convenience it adds when shopping online, is that it's already attracted roughly 430 million active consumer and merchant accounts, both sides of the equation. That's the difficult part, is adding both sides of that equation and rising up to a certain level scale. And once you're at a scale like PayPal is at, it becomes difficult for any merchant to not accept PayPal as a payment method, because now you're excluding yourself from the millions and hundreds of millions of customers that have PayPal and want to use PayPal to shop. And the same thing for consumers. If you see more and more businesses accept PayPal, you're more likely to use PayPal. You're more likely to sign up to PayPal if you know that merchants are accepting PayPal. And so it's a positive, virtuous cycle that feeds on each other and can grow to become an extremely lucrative business. Just see how profitable Visa and MasterCard are. Visa and MasterCard are two of the most profitable businesses in the world. PayPal is not there yet, but that's the potential where it could get to if it grows to be even a bigger fraction of the size of Visa and MasterCard. Right now, PayPal, I would estimate, is like 1/10 the size of Visa and MasterCard in terms of total active accounts. And so if it can grow to even a larger fraction, that could be a big boost to PayPal's revenue, profitability, and of course, the stock price. So I mentioned earlier how critical total payment volume is for PayPal, and I have some good news to report about that. You'll see here the year-over-year growth in total payment volume. That was decreasing in 2022, which makes sense if you consider that people use PayPal more often when they're shopping online. It's got a greater market share of transactions online than it does in person. And so in 2022, that was the height of the economic reopening, and that's where people were spending more money away from home, and that hurt PayPal's revenue growth. 2023, it's turning around. People are returning to shopping online. They're realizing how much more convenient it is to shop online, and often it's a lot less expensive to shop online. And you could see PayPal's total payment volume growth increasing, accelerating from 5 to 10% in Q1, from 10 to 11% from Q1 to Q2, and from Q2 to Q3, 11% to 15%. This is great news for PayPal stock investors. The company is accelerating the total payment volume on the platform. Unfortunately, it wasn't all good news for PayPal stock investors. The company does have a few major risks that it's working through right now, and one of that is the declining active account base. So what I have here is PayPal's total active accounts, and you'll see from the fourth quarter of 2022, when it had 435 million active accounts, it's been steadily decreasing from 435 million to 433 to 431 million, and in the most recent quarter falling to 428 million. So 1, 2, 3 straight quarters of decline, and to make matters worse, the most recent quarter the decline accelerated. It was falling 2 million, 2 million, and now that fell 3 million. So this is a considerable risk. PayPal says that the reason they're losing these customers is that they're focusing more on high value customers, and they're not focusing on customer growth. They're not going after these low value customers that they don't think are going to be profitable for the company. I get that. I understand that. That's really what's been happening with many of these types of companies worldwide, is as the cost of capital has increased in 2023 with rising interest rates, businesses have been focusing more on profitable customers. They've not been investing aggressively just for customer acquisition because the cost of capital has increased and there's been a greater focus on profitability over just growth and customer growth. I understand that. I get that. Still, it's a risk, and investors ask, how much longer is this decline going to persist? Is it going to continue accelerating from 2 million to 3 million per quarter? Could it fall to 5 million per quarter? It's a big question mark and it's a big risk. It's something I've been paying attention to for several quarters now and looking for PayPal to turn this around, at least stop the bleeding here. And another major risk for PayPal stock investors has been the declining transaction margin. And I have that highlighted here. You can see from a peak of 51% in the third quarter of 2022, it's fallen for 1, 2, 3, 4 consecutive quarters down to 45.4%, a considerable decline from the 51% year over year. This is another major risk for PayPal. The primary reason for this decrease is a decreasing transaction take rate and overall take rate, which I'll note a little bit later in the video. But this is troubling, as well as the declining active accounts. These are the two major items I've been looking at with PayPal over the last several quarters, hoping that the company can put an end to these declines and turn things around, or at least stop the bleeding in these metrics. So I noted in the beginning of the video that PayPal has been doing a good job in keeping costs under control and lowering costs. And what they have here is a chart of their revenue growth, non-transaction operating expense growth. And they have here in the blue the third quarter 2021, third quarter 2022, and the third quarter 2023. And you'll notice a steady decline in their non-transaction operating expenses, growing 17% in Q3 2021, then growing only 4% in Q3 2022, and declining 12% in Q3 2023. And you could see declines in all the major categories in customer support, sales and marketing, tech development, general and admin, declining most categories year over year over year. And I think this was prudent financial management here from the management team in realizing the headwinds to the business and slowing their expense growth to match with the slowing business growth. I think this was good management, and I like to see this from companies effectively manage the scenario, the macroeconomic environment, and really adapt to the conditions. And I think PayPal can be given credit here for doing a good job. So finally, I wanted to talk about the take rate, which I mentioned earlier in the video. I have here highlighted PayPal's total take rate and the transaction take rate. And you'll notice again a trend that's not friendly to PayPal stock investors. The take rate starting from the fourth quarter of 2022 when it peaked at 2.07, falling to 1.99 to 1.94 to 1.91. And similarly, the transaction take rate from 1.88 to 1.8 to 1.74 and 1.72. Again, a streak that investors do not like to see, because that means that PayPal is charging less to merchants for its service, and that's likely an indicator that PayPal needs to do that in order to remain competitive. And so PayPal said that much, that the reason for these declines are that it's lapping elevated contractual compensation from merchants last year. In other words, saying what I just said, they had to lower the fees that they charge merchants in order to get merchants to accept PayPal as a payment method, in order to stay competitive, in order to get merchants to say, okay, we'll take PayPal as a payment method if you only charge us this much per transaction. Otherwise, we may not accept PayPal as a payment method. We may not want to accept PayPal as a payment method. So now that we looked at the third quarter and all of the key metrics from PayPal in the quarter and the developments, I wanted to look at its valuation to update my recommendation for PayPal stock. And when I look at PayPal's forward price to earnings ratio of 9.9, the stock looks cheap to me. It looks like a good value. It looks like the stock has incorporated all of those major risks that I talked about earlier in the video: declining active accounts, declining transaction margin. All of that seems to be incorporated in the price because of that valuation, right? If you didn't have those risks, PayPal would not be trading at a forward PE of 9.9, because the company is still delivering revenue growth and solid earnings growth, as I showed you earlier in the video. And you can look back at a longer chart of PayPal's revenue and earnings growth. So the risks are what's bringing down PayPal stock. And I feel that the risk versus reward is worthwhile for PayPal stock investors. So I'm keeping PayPal stock rated as a buy. But before I let you go, if you've gained any value from this video, which you probably have if you made it this far, please subscribe to the channel. It'll really help support more videos just like this one. Thank you so much for watching.